We're good.
Okay, excellent. Well, welcome everyone. And let's get started. Today we're talking about job costing, and this is an introduction to job costing. So what I wanted to start out with is talking a little bit about warning signs a contractor is in trouble. And this comes from Surety, the Surety organization, suretyinfo.org. So there's a couple of things that really jump out. One is that failure rates, as of about 3 years ago, failure rates of contractors during kind of good times, and they're about the same, maybe a little bit lower right now, but about the same. Failure rates of large firms are around 30%, and failure rates of small firms around 25%. Of course, that's different in each area around the US. However, some of the major warning signs that precede this failure is cash flow not well managed, profit fade, poor estimating, and no comprehensive business plan that's actually followed. What this really comes down to, a lot of this is just financial management. Go figure. So, my name is Phil Bride. I'm a business consultant and executive coach and president of Rogue River Consulting. And we have also with us Michael Kelly, president of Silvertrack Systems. He is an expert in automation solutions. Say hi, Michael.
Howdy.
So let's dive into this. So let's spend a moment and talk about the components of job costing. And we know it comes down to materials, labor, and overhead. And of course, profit margin is often tied into this. And let's talk a little bit about what it really is inside each one of these. So of course, every job has costs for materials, lumber, concrete, sheetrock, all that good stuff. And in this process, we do phase and cost code assignments or division and cost code assignments for all the materials in the cost code. Vendor information needs to be tied to the cost codes, and then of course cost of the item has to be tied to that code. Labor is accounted for as well, and it can be, as we know, a huge component of each job. Cost code assignments are made, and if there are different labor rates for different work, then unique phase codes or cost codes rather are assigned. Of course, you add the labor rates by skill and experience, and it's often important to assign the prevailing wages in your location. For example, in Oregon, we have Bureau of Labor and Industries, BOLI, on their website, publishes twice a year. I'm not sure about other states, but publishes twice a year updated prevailing wages in a PDF. It's relatively easy to go and grab it off the website and take a look at it. Ours is about 30, 40 pages, and you can zero in on your tile setters and your framers and your plumbers pretty quickly and get the prevailing wages for the type of work they do. Also included is overhead. Overhead like incidental and commodity materials, tool repairs, supervisor costs. And the big thing is it's got to be consistently applied throughout all of it. And then, of course, add in profit margin into this. And companies I've spoken with, if they use a percentage, which most do, they look at anywhere from 8 to 20%, depending on the risk, depending on the competition for the job, things like that. And of course, some public works projects, public projects specify your overhead margin and your profit margin. So it becomes through this whole process, it really is crucial to track the expenses and hours in field reports. A lot of times people talk about best practices as daily field reports or at least weekly field reports to get into the habit of. So it only takes a few minutes each time. Seems like a lot of work and a pain, but it really can pay off. The time it takes is often an excuse of, I don't have time, I'm exhausted at the end of the day. It's like, what a pain. Well, it can become more painful if the profit margins, if you suffer from profit fade, and the poor planning results in costs kind of creeping up, change orders not being addressed, and job estimates missed. So if questions like this come up, like where are those receipts? Why can't I make money off these jobs? What happened to my cash? If you've asked any of these, there are things that can be done around daily job costing discipline to get this back on track and get going again. It's a lot easier to do it a few minutes each day than it is to do it, try to remember at the end of the month, or when your accountant goes, hey, what's the deal? So let's talk a little bit about best practices around job costing. First, and this, by the way, comes from accountingdepartment.com. These guys, of course, they want everything tracked down to the smallest cost and increments of hours. But the point is to track the costs and factor in the small costs, especially if these small costs become material over time over a job. And material, of course, means something where it will affect your profit margin in a significant way. A lot of times you can group in the really small costs, and if it's no big deal, that's a judgment call on your side. But monitoring the costs on the job becomes just absolutely crucial to monitor those costs on an ongoing basis. Compare the actual cost to estimates, categorize the costs through cost codes, and don't forget to include the overhead. Of course, technology and good software is just saves a ton of time if it's in place and in place well. By the way, at the end of this, we're going to talk about best practices through the bulk of this, and at the very end, we'll talk a little bit about solutions. So just so you know. So here's a straightforward way to go through the process to implement job costing. A lot of times people start with, well, let's just get control of our costs. Let's make sure we capture all the receipts, all the costs, which can be a good thing. But there's some infrastructure and some planning that really can help a lot up front. And the first is, what the heck are the goals for your job costing purpose? Well, it's to make money, Phil. Yes, we know that. But what are some very specific business goals around that? How much time do you want to spend doing the tracking, and how much are you willing to pay for in this process? So one of the biggest questions that come out with job costing is like, how do I allocate? Well, and the answer is almost, how do I allocate something? This, that, or the other thing. A lot of times it's burden or overhead. And the big answer to that almost always, just about every time, is it depends. It depends on if you do this or if you do that. How's your company structured? What are you trying to accomplish with your company? All those questions back on it depends comes down to goals and what are you really trying to do with your project, with your company, and with your job costing. Next is to set up cost codes and set up a cost tracking process. In my opinion, process always precedes automating the thing with software, however you do it, but have a good process that's well understood precedes the automation. Set up a change order process. Change orders are a huge deal. A lot of times they make or break profits, and they certainly are one of the leading causes of profit fade, not doing change orders. Then create the reports, set up weekly report reviews, and automate as much of the process as you can to simplify the whole thing. So there's no sense to tackle everything at once, unless you really want to, of course, and can afford the time and money. However, it's more important to have a plan and start tackling a piece at a time and what you can do immediately. And sometimes you can grab big chunks of the job costing process in one fell swoop. But understanding the process well right up front, it can be huge.
I have a question here. Back on the change order process, Phil.
Yeah.
How important is that? How do you like, is that something that you should do right away, or is that something that you can kind of wait until you get through your first few jobs?
Well, it all depends on if you want to make money on the jobs. So change orders. Um,
So, in other words, it matters.
yes, I would argue yes, but we all fall into the trap of, well, we'll just kind of slide it in and we'll get this thing done and we'll come back to the owner later and try to recoup some of our costs. We'll just take care of it because we don't want to disrupt things. Or I don't have time to go deal with, the back and forth with the owner and make sure it's all clear. Well, that's a leading cause of profit fade, and profit fade is a big cause of companies going out, or failure signs, of warning signs that companies are in trouble, is because of profit fade, and that can be directly tied to change orders not being approved, invoiced, and collected. And all of a sudden you have all these costs you incurred for bringing subs onto the job, adding more materials, doing the piece, and the owner goes, wow, that was really nice of that contractor to do that for me. Thank you. And that's the end of it. You get a big thank you and less profit. So yes, it's huge. Change orders are huge. And I don't know about you. I'm certainly guilty of it in some of the jobs I've done. And people, it's just a big deal. And change order discipline can be a huge deal. And it just helps ensure you hit your profit goals. Going back to goals.
Sure, thanks. Yeah, I just was
Sure.
wondering about that.
So let's talk a minute about master format and what the job codes are all about, cost codes are all about. So CSI is a standardization body that put together this thing called master format, and it's a standard that's published by this organization, CSI, and it creates these cost codes throughout the construction industry. By the way, if you're on master format and have been using it for the last few years, in 2016 there was a new master format established in April, and it's a good idea to consider moving over to the new master format. Just at least be aware of it. And the master format consists of 6 digits, optionally 8 digits, with divisions, and within the divisions there are groups and subgroups that just cover all kinds of results that a job can have: plumbing and framing and finish work, excavating and pre-work, demo, all that stuff. There are literally hundreds of cost codes in this format, so most companies don't need hundreds or hundreds. They just need a few dozen, maybe more, maybe less. And so it really does help to have to zero in on which ones are the most important for you. So with these in place, and by the way, most tools have some variation of this in place for you already, but it's good to understand it and understand it well, because it's going to tie together all the things that we're talking about. It helps tighten the cost control, prevent cost overruns, prevent that darn cost creep that happens inevitably in a job, which prevents profit fade, helps prevent it, and improve future job estimates, because you can get a good handle on your job costs at a project by project, job by job level. Okay. So the key is to tie the contract terms for a job to the cost codes and the GL in accounting. So the cost codes really tie all this stuff together, and it always goes back. Best practices say it always goes back to the estimate and the job and the contract terms for the job. So you can tie them together and tie them throughout the whole thing into the GL. Then you can track your job costs throughout the job. You can track the differences between the actual costs and the budgeted or estimated costs up front. You can tell when change orders are really important because they're not in the original contract, and so you've got to add costs, and hopefully you add revenue to that too. You can allocate the cost to the right jobs, and you can really get this process down and get on top of your job costing, and understand what kind of profits you're realizing per job. Okay, so tracking the costs, it really is kind of a big deal. Tracking costs within a job, Tracking costs at, it's a judgment call to what level and how in depth and how detailed you want to go. I had a client of mine, a roofing contractor, recently go, "Are you kidding? I got to track all my costs." Well, it depends on if the costs really add up to being material or not. If they add up to being material and there's lots and lots of little pieces going into it, little items going into it, lump it into something and do an estimate overall and allocate it. If they're material and they're in little bit bigger chunks, you might really consider tracking them, especially if you're concerned with profitability and losing points in profitability. So it helps you know your profit before job completion. The worst thing to do is to find out at the end of the job you were half your profit that you thought you were going to be, or worse yet, at a loss. To know earlier, at
A
least
little late then, huh?
I'm sorry, say again?
It's a little late then, huh?
Yeah, it's a little late at when the job's over. It also helps you identify your job billing and managing the WIP and over/under billing, as Michael discussed yesterday during a webinar. And part of that is comparing the job cost to date versus committed costs that are not yet billed or not yet incurred, but you've committed to them. Then you do this across all jobs, improve similar job estimates, and negotiate better terms with your bank when you can go in and say, look, I understand where I am on all jobs and I have good control over my job costing. Chances are the banker will be extremely impressed and more willing to help you with short-term loans. So typical job cost reports, by the way, these are often in a good job costing structure. Not everybody uses all of them, and they vary all over the place on what and how you do it, but it comes down with a budget derived from the estimate. The estimate just flows right into the budget for the revenue and the costs. Change orders, those darn change orders and a change order process where you make sure the owner knows up front that you're going to be doing change orders if they ask for changes. Job to date costs, tracking those, that's what we mostly think of in this thing. Commitments is another important thing, and that's the encumbrances, the things that we know we're going to be paying. We've committed, like a sub, that we know we're going to be paying throughout this job, but we haven't been invoiced for it. But that cost is coming because we've signed a contract with them, and they're going to, we're going to pay them. Or materials that haven't been delivered or invoiced yet. Those are all commitments that have to be tied into this. Billings to date, and then the over/under billings tied to your earned revenue to date through the job, which lets you know exactly where you are as far as profitability. A job cost report, just a basic job cost report that gives you the numbers of where you are on it, and then profit to date and profit projections. So you know if you're starting to slide, also known as profit fade. Let's take a look at a basic job costing report. This is very simple, very straightforward, but pretty darn common. Starts with a cost code, a description, an estimate from your contract, approved change orders, so the owner actually signed for it, total costs, which is just the estimate plus the approved changes, then cost to date that you've actually been invoiced or written checks for, the variance between the two, and then any commitments. And any commitments are what you plan to do. Notice the commitments plus the variance is only 100K, so there's something missing from the approved change orders in commitments. So this indicates that we've got, the commitments are not fully captured in this report, and it tells us something. But it gives a good overview of where we are on it. And you'll see variations of this report where sometimes you'll have a commitments variance also on this. Let's look at an actual report. In this report, kind of flows through the same thing. I took an actual job cost report and just rounded the numbers to make the math a little bit easier. But where you see off on the right, you see where there are highlighted problems, or things that need to be paid attention to. Anything where the commitment variance is different than 0, there's something that is not fully accounted for. So in the first line, materials and labor have not been fully determined yet. Second one, change orders are all in place. Everything is copacetic. Third one, subs are not yet signed for the job. Uh-oh, kind of a problem. We're scrambling to get that in place. And the fourth one is no change orders were issued, but there were additional costs incurred. So this kind of highlights some issues that you can derive just from a good job cost report. Over/under billing does kind of the same thing, except this really helps you understand where you are with your profitability and earned revenues through the job. And there's some calculations in this WIP construct. It's pretty straightforward. Michael does an excellent job explaining it. If you happen to miss the webinar yesterday, let us know and we can certainly get you information on that. So the business type, focus, goals, KPIs, it really drives the job costing efforts. And there's so many differences between contractors. It's one of the common questions that come up from people trying to do job costing is, how do I allocate, and then some question. How do I allocate, this particular thing? Should it go in GA or should it go into the burden? Should all the burden be allocated into overhead? So there's all kinds of questions about what exactly is the allocation. To simplify this question, you really have to understand and nail down your company focus areas, your goals, your KPIs. KPIs, by the way, are key performance indicators. Those are the metrics by which you're measuring the success of your company. And it can't just be revenue and profit, although those are two big ones. It's got to be more in depth than that. And how much time do you want to spend doing job costing? What level of detail do you really want? And what are the allocations that meet GAAP rules, generally accepted accounting principles, rules for your particular situation? So it's important to do that pre-work. It's really management and leadership work right up front will help simplify this whole process, and you won't get the "it depends" answer back. You might get more refined questions back so you can get to the bottom of it quicker, but it makes a huge difference. So here's a typical job costing progression. This is pretty interesting. Start at the bottom, new to job costing. Okay, so new to it, don't really know how to do it. I've got a pile of receipts and I've got my checkbook, stuff like that, and my credit card. Okay, fine. Next level up is so at the first level, you learn about it. You just dive in and learn. Second level is use what's available. Use QuickBooks. QuickBooks is kind of a typical starting point, along with Excel, any existing tools. I just happen to have it, and there's job costing in there. Next level up is, and it's red. I put it red in the words off to the right because it's often skipped. Put business structures in place, the goals, the KPIs, processes, teams, automation tools, reviews, a review process of the structure. And what often happens is we get to the next level up. And I've been to CFMA conferences where the job costing presentations had a huge room. It was standing room only. And question after question after question was, how do I handle this situation? How do I handle that situation? How do you do it? Well, the answer in almost every case is, it depends. Tell me more about your particular situation and what are your goals for your company. So go back to step 3. The red is put the structures in place and really understand. The top level is your sophisticated, organized, knowledgeable, structured, and automated. Through all this thing, it's continue to learn the specific cost allocation best practices for your business and your business goals. It's a continual process, and the accountants that dive into this are continually working this working through this because it can be involved. In summary, the key elements are job costs, job codes, cost codes. So establish all this stuff up front. Distribute the cost between your estimate, budget, and GL, and make sure it all flows nice and neatly. Then you can derive reports and actually manage it. Which tracking the cost is a key piece of this, and then the reports to track it, and a review of the reports with the project manager there, the accountant, and the key person in charge of the company there to track costs and make sure things are going the way you want. So now what I'd like to do is pass it over to Michael, and he can talk a little bit about solutions around job costing. Michael, take it away.
Yeah, awesome. Thanks, Phil. Yeah, so there's a lot of solutions out there to job costing, and one thing that I tell people who are just getting started out, like the ones who are jumping in a van for the first time and getting their first job, is the first step is save your receipts. I know that sounds elementary, but it really is. It really is. Just save your receipts. You should be able to go back through them and figure out how much you actually spent when you get done with a job. But that quickly breaks down, right? I mean, essentially, you won't be able to work that for terribly long. Basically, at the end of your first job, when you're starting up your next one, things start to get confusing, and that's at a really low level. That's at the basic level. For any sophisticated company, any company that's interested in growing and in really getting into to understand their job costs and also be able to control their job costs as they're hiring other people who are in charge of spending the money, you need to have some way of looking at all of these things that Phil's laid out here in a kind of an organized way. And it can be kind of overwhelming if you're trying to create this all from scratch. Frankly, if you're going to go and open up an Excel document and say, okay, I'm going to create a job costing system, it would be a lot of work trying to figure out the cost codes and all of that kind of thing. There's a lot of solutions out there that do this for you, and a lot of them do it quite well. QuickBooks, oftentimes people end up in QuickBooks because that's where you kind of start your company. But unfortunately, QuickBooks doesn't have a whole lot out there for contractors. They have their contractor package, and that's actually not a bad package in a lot of ways. But where it starts to break down is when you have complex jobs you actually want to use cost codes for. And as far as I know, the change order process in QuickBooks is less than perfect. And one of the kind of the big gorillas in the room these days is Viewpoint, a Portland-based company that has kind of gone on a spending spree. They bought out Maxwell, and they acquired their Pro Contractor product, which is a great product for the smaller contractors up to maybe 20 million. They recently acquired Spectrum by Dexter Chaney, which is another great product for kind of the mid-level contractors. And then they have their Vista ERP, which is for the bigger contractors. Some of the work that we've done is to make Vista actually accessible for even smaller contractors through some of our bookkeeping practices. And really, there's the important thing is that you have a solution that can track your costs on your job before the job is done. If you don't know your job costs, and the accounting software you're using right now won't allow you to see your job costs before the job is done, then you need to look at something else. You need to look at another solution such as Vista, such as Spectrum, and say, what can this do for me so that I can change behavior of me and my employees and the other staff at my company before the job is over, while there is yet time to make a change. We can help you with that. We work with a lot of companies all over the United States and Canada with those products. We are an official reseller for the Viewpoint, and we help a lot of companies in a lot of different ways. And you can contact either Phil or myself, and we can get you hooked up.
Hey, Michael, we have a question, which I just now saw another question. How do you integrate production units with costs?
Sure.
And you mind taking that one? And there's
no, not at all. So one of that's a real standard thing. So it gets right to the heart of productivity, right? How do you manage your labor when you are you're maybe getting paid per for a unit, or at least you're bidding per unit. If you're a masonry contractor, for example, you might bid square feet. And you might say that my masons can get a certain amount of square feet for this type of stone done in a day. And how do you manage that? Well, it requires both tracking how many hours you're spending, and it requires tracking how much quantity you're getting done, and it requires you understanding how much your cost is per hour spent. And if you have those three inputs, if you have a system that allows you to have those three inputs where you can just, on a daily basis, good accounting systems, good job costing accounting systems, then allow you to see your productivity, and you can compare it to bid. You can have it say, well, I bid it with this quantity per hour and this cost per hour, but I'm actually tracking at this. I'm either doing better or I'm doing worse compared to my estimate. I hope that answers the question.
Okay, another question is, how do you track submitted versus approved change orders?
Yeah, so well, that's an excellent question. That kind of gets to the heart of my question for you, because I was wondering from what you've seen when you're working with a lot of these startup contractors, when do you start tracking that? And from what I understood from your answer earlier was basically as soon as you want to start making money. So in other words, right away. And
Right away.
and I can tell you from the software side, the most job costing systems, and especially the ones that we help with, Pro Contractor, Spectrum, and Viewpoint, Vista by Viewpoint, all three of them owned by Viewpoint out of Portland. Those three all have the ability to say, this is the cost impact of this is the revenue impact of this change order, and have it in a pending state until it's signed. So you can start to say, well, this is probably going to happen, but until I actually get a signature, we're just guessing. And so it's a matter of having a system that allows you to track costs in a change order and be able to track the status of those change orders.
Yeah, so a simple change order could be as simple as just it's a mini contract of a statement of work of what will be done, and to get a signature from the owner agreeing that this is the work that's going to be done, and this is how much I'm going to pay for it, with a signature on it. And verbal agreements, sometimes they work. Early on in my career when I did this full time, everything was pretty much verbal and a handshake, but not anymore. Not anymore. Get the signature, get the stuff signed and recorded into a system so you have it documented.
Perfect.
Okay. I don't see any other questions coming through. So with that, I'd like to thank you all for taking time out of your busy day and joining us. Sorry about the little technical difficulty. I'm seeing some of the comments in the chat right now about the first couple of minutes when my mic was changing my voice on me.
I thought you were going to try out for the New Age Chipmunks myself.
I was thinking about it.
You've never sung for me in the past, but maybe you would now.
Maybe I would, yeah. Well, you didn't completely confirm that my voice is back to normal, by the way. So my name is Phil Bride, business consultant, president of Rogue River Consulting, LLC. And you can reach me at phil@philbride.com, phone number you can see on the screen. And Michael is an expert in job costing solutions. Michael Kelly at silvertreksystems.com. And thank you, everyone. Have a great rest of your day.
Awesome. Thanks so much, everybody. Thanks, Phil.
Okay, bye now. Thank you, Michael.